Ladies and gentlemen, welcome to the Fintech Frenzy Daily Show. Today, we had the SoFi Fireside chat. Nubank talked about strengthening their Mexico business, as well as maybe some senators that are also purchasing SoFi, those exact senators that might have been working on the SoFi forgiveness board. That being said, we have a lot of things to cover today. Tomorrow will be even just as exciting as we have all these fireside chats to go through. There was one on Block, one on Marqeta. Tomorrow there's going to be PayPal and also Robinhood. We're going to cover all those tomorrow, however. Today, let's focus on SoFi. Just jumping right into it, I'm just going to be going through all the bullet points of the things that were very exciting on the fireside chat. In no order would I weigh this from most important to least important, just things that were said that I found very interesting. Overall, though, these have already been said. Going on, this is what CEO Anthony Noto had said. Talking about contribution profits and contribution profit margins, he said that the lending platform is at a 70% contribution profit margin, which we've already known, but he did say that he's hoping to keep it steady from here. And if they do see improvements going forward, obviously that's what they're going to aim for. But right now, not really talking about that shrinking or being really pressured at all. That's quite exciting. Technology platform is at about a 20% contribution margin, but that should get upwards of 30% over time. Massive improvements. If you're going from a 20% contribution margin up to 30%, it's a 50% increase whenever just looking at that one statistic, right? Contribution margin, by the way, is the actual profit margin that you're getting specifically from that segment. So you're kind of taking out a lot of the fixed costs or really costs that might have to do with generally running the business, but not specifically that one product. Those things are taken out. Contribution is what is contributing to this specific service or product, and take the revenue from that minus the cost of those goods or cost of those services. That's the contribution margin. Then on financial services for contribution margin, obviously we still came in at about negative $4 million this quarter. So it is not profitable right now or contribution profitable. He did say, however, SoFi Money is leading the charge right now on making it profitable. And if we didn't have just two services, SoFi Money, sorry, not SoFi Money, SoFi Invest and SoFi Credit Card, we'd be about $150 million more profitable. So a very profitable segment, but obviously we're giving those members every option that they can to have a great financial life, right? Offering them their ability to have a brokerage, offering them the ability of credit right now, which actually does have high defaults on that product. And so in the short term, it's not good. In the long term, all those products should be contribution profitable. They're talking about how they want to focus on the health of the overall user, financial health of the overall user, right? So offering them products like SoFi Relay, offering them products like SoFi Money and these sorts of things that might not be good for us in the short term will lead to great things in the long run. Part of this experience they're also talking about is how the average direct deposit member holds over $20,000 in their SoFi accounts, okay? If you can focus on saving your actual user base more money and focus on being the good, company that you want to be, then obviously those rates go higher, and then we can actually benefit greatly with, lending platforms and these sorts of things if we can have more money in their accounts. One thing, this was a great note that Anthony Noto spoke about, which I thought was funny. The only reason why they bought Galileo and Technisys was the idea that no one could even service what SoFi wanted to become. He said, we needed the tech platform because no one was selling a product that SoFi needed. That is so funny. Just such a unique business. And that's why, no one really has the cross-selling holistic digital banking platform that SoFi has. Some other interesting points that we picked up on. He said, alternative asset investing is coming to SoFi Invest next year. I'm thinking things like art, collectibles, something like this, stuff like even public.com offers that, potentially SoFi could be getting into. He said, talking about the stadium deal, which I thought was absolutely amazing. He gave a lot of insight on this, talking about how they wanted it for TV exposure, not just in person, and that if you were to run ads on those Super Bowls or on those individual sports games that they were running, you would have already passed the amount of money that it costed them to actually buy the SoFi or the rights to the stadium naming already, and yet still not get nearly as much exposure. He said, it's the best advertising cost compared to any individual ads. Some audience members need to be seeing an ad 15 plus times in order for them to buy it. That's really good because a lot of these people are reoccurring members to that audience to watch sports games. And that the stadium has been much better than they had ever expected, with things getting into like, Taylor Swift, the Olympics, all of these massive events that they never, ever could have imagined because of the level that the stadium is in terms of, a massive, massive stadium that's captivating large audiences. Some other great things. He said, Q3 is going as expected. Student loans are seeing a slight tick up this quarter, which we had suspected was going to start last quarter, but I guess not as soon. Just because people are starting to refinance their student loans earlier than Q4. And they're seeing people come in for both lowering their rates versus how much they got at a federal level, and then also to extend their overall payments from 10 years to 20, which might even be at a higher interest rate than what they were paying before. But because they're actually expanding those payments, the rate in which they're paying per month is actually going down. Okay, so it might not be the greatest financial decision in terms of how much interest you're paying out, but it might be more affordable. He said whenever talking about student loan originations, he said it may take several quarters to get to 2019 levels. This was a little bit of a problem. And he said, in the short term, it might only be half of what we're actually expecting. That's a little bit worrisome. It's making me think that it'll be in the low $1 billion, maybe $1.5 billion of originations, when really we're expecting more along the lines of 1.9, 2.2, something like that. So student loans might be a little bit lower than what we're anticipating. But if there's also some, rate cuts and these sorts of things, then it would be much faster. He said, now this is interesting, and I don't quite agree with Anthony Noto on this point, but he said, we've only ever refinanced 1 million student loans. Today, we have 6.2 million members. So the option for cross-buying opportunities into student loans is much bigger than it ever has been. I agree, but then again, I don't think that that's a fair comparison. I don't think that there's going to be 6 million members that all are going to use even SoFi for student loans, even, comparatively to another member, or just keeping it federal. But obviously it will be good. Cross-selling is a big part of SoFi's business. He said non-bank competitors, which I immediately start to think about someone like Robinhood, for example. He said non-bank competitors cannot compete whenever rates go down on offerings on APY. So someone like Robinhood offering 4.9% just simply can't compete with SoFi because we'll be able to hold rates higher for longer. We've known that for some time, but he said market share will definitely increase as rates go down. All the growth right now, however, is coming from top 5 banks, so not even worrying about other fintechs. And he also said big banks are so big right now, they might not even know that they're losing clients because that's how big the total addressable market against those top 5 big banks really is. And then one last point, while talking about the technology platform, he said everything is going smoothly and things are expected to still ramp by end of year. But he said one of the things that we've been very surprised with on the high side is that big banks have surprised us with much more interest in allowing us in on the RFPs. Okay, meaning they're allowed to sit at the big tables during these deals and offer up their product for proposal versus all of these other big tech providers. It's quite exciting. You can't win deals if you're not at the table, right? Once we're actually at the table, there's an opportunity to win sales, and we will win a percentage, hopefully a large one. But if we're not even offered that solution, we're obviously not going to make any. Now, let's talk about Nubank. Nubank has recently strengthened its footprint in Mexico with the launch of personal loans. If you guys haven't known, Nubank has recently gotten into Mexico back in 2019. Up until a couple months ago, back in May, they were not in any other product other than credit cards. Then they got a license and finally started utilizing it in May, like I said, to get into checking and savings accounts, okay? That ability has then rushed in a ton of new people to use Mexico's checking account with new. And then they've also gotten into the debit card program. And then, so now we're debit card, credit card, and checking accounts as of, September 5th. Just yesterday, they've recently just announced personal loans. Another big, massive profitable area for Nubank, the second most profitable product that they have aside from credit cards. I did, however, want to read some things off to you. So, according to a survey conducted by Cantor in 2022 for international personal finance, 6 out of every 10 Mexicans had applied for a loan. But according to 2021 National Financial Inclusion Survey, only 33% were able to obtain one from a formal financial institution. We aim to promote access to financial products and credit while also promoting financial education amongst our consumers. We are having a positive impact by by enabling greater access among Mexicans. As around 20% of the smartphone connected adult population in the country has already applied to build a financial relationship with us, we hope to continue to expanding our footprint in the country with the launch of personal loans. Like they say here, they want to make access to simple, transparent, and flexible loans through the new app. The application process can be completed digitally and completed in less than 5 minutes. That is so much different than what, the normal Mexican population has had previously with incumbent banks, okay? Historically, they have been very dissatisfied with lending in Mexico, okay? Their access to credit is very, very low. Now, if Nubank, doing what they love to do, great product innovations and great expansion marketing and all the network effects that Nu has had in Brazil, if they can bring this into Mexico, not only does this completely change the way I look at the pricing of their stock, because not only are they seeing the growth in one country, they're seeing it in two. We're expecting higher growth rates in terms of total member counts, but then profitability continues to go up on a per member basis, okay? These are massive products, personal loans, credit cards, and then obviously sort of the checking and savings accounts, although they are still very profitable. What it should do is get those types of products, the credit card products and the personal loan products, into the hands of many other people. That is, sort of the cross-selling nature of financial services. We see it at SoFi. We're going to see it at Nubank as well. Could not be more excited about this company, and we're able to get it at very cheap prices. Next, on to the next part. Instacart. Okay. Instacart has recently announced, let me just switch over back to here. Instacart has recently announced an app for Shopify for Instacart ads. Okay. They will actually allow you to put your consumer packaged goods on Instacart, allow you to promote them. And then obviously you can view all of that through Shopify, all in one dashboard, allow you to view all these things. Very, very cool. I hope that the Shopify Instacart platform continues to deepen in their relationships. It's the one thing that I think Shopify has been very strong at is partnerships with the next greatest thing, or even ones that have already existed. Last but not least, in today's news, I know that was a little short, but Senator Thomas Carper is in the 117th Congress, served on a number of committees. This is Voice of Reason. He just said that he was actually in part of the student loan forgiveness, has just recently purchased about $10,000 to $15,000 worth of SoFi stock. You can see it on Unusual Whales. That being said, is it a big deal? No, this isn't a multi-million-dollar purchase. However, this person that is very close with the Student Loan Forgiveness Act does see the absolute potential for, student loans coming back for SoFi. I'm a big believer that, what we're doing and investing in SoFi is a very good deal. Obviously, someone making a small purchase is in some way authenticating that or giving me confirmation bias for that, but it's nothing too serious or this isn't Nancy Pelosi that I'd purchase our stock. I mean, I'd be really happy if she did, but still can't hurt, right? Politicians, for the most part, have always outperformed even hedge funds and the greater S&P 500. Just funny to say that. Obviously, there's a little bit of bias whenever you know what's going to be slapped down, for regulation and the likes of this. Anyway, it's a shorter show. In terms of Q&A, we did have a couple things that were said. I got 3 questions here. Tanner, with the exception of Robinhood, why would SoFi competition want to adopt their tech platform, especially when there are other non-competitors offering similar tech services? There is other competitors that are offering similar tech services. However, it is still looked at on an individual basis, in my opinion. I don't think that a single company, like the likes of Chime, for example, would ever think about SoFi as being another fintech competitor, and that's the reason why they wouldn't want to use that tech platform. I'm sure they look at it at an individual basis, seeing which platform is going to work best for us, not worrying about which one is the parent company that owns it. I don't think that that's actually the case. Number 2, this person says, my financial advisor, who used to work on Wall Street, mentioned that in order to disrupt the finance space, the real money is the high-end client. He questioned whether or not SoFi had enough product offerings to prevent churn of their Henry clients, which is their high-income earners not rich yet, to the likes of the bigger players like JP Morgan. SoFi should be looked at in their current state. Okay, obviously there is some premium to the stock based on what future projections are going to look like, but I wouldn't worry about SoFi replacing JP Morgan just yet. They're growing at a high rate. There is opportunity for them to grow in their current industries, and that although there's a ton of money to be made on the high-end client, that should just be looked at as another opportunity that SoFi can get into going forward. Right now, churn for SoFi is near abysmal, okay? There's a ton of opportunity for SoFi to continue to grab onto new clients, and people don't seem to be leaving. That being said, I'm not worried about what JP Morgan's doing. There's a lot of different industries. And lastly, a large part of SoFi's books are in personal loans. With the Fed looking to potentially hurt the job market, what gives you confidence that SoFi will weather the storm? History. SoFi has been able to pivot into many, many different industries. And in terms of their overall book value, I don't actually think that they have a large personal loan or even lending segment enough to hurt them nearly as much as the rest of the entire banking industry. Okay. I think that SoFi can do a ton of things, whether it's pivoting to other products like SoFi Money, SoFi Invest, or the likes of other things to help differentiate things, or even the tech platform. Okay. That's the best thing about SoFi. It's like literally we used to have student loans as our biggest product offering, and then that entire product line went away. Okay. That was the scariest time in SoFi's business. I don't think the job market is going to be nearly as bad as to be a full wipe on personal student or home loans. Just don't believe it. But that is the show. All this information was sourced on Seeking Alpha. If you guys want to see that, I've got a promo code down in the link down below if you want to support the channel. Thank you so much. Hit the like button, but bye for now.